Good evening, everyone, and let's start off by telling you about the three guests who will be joining in on the show. We've got Gautam Chacharya, Head of Research at UBS, joining in. There's Ashwini Gujral, Fund Manager at ashwinigujral.com, and Neeraj Diwan, Director at Quantum Securities. Neeraj, this kind of overreaction to negative news is continuing to become quite a constant for our markets. What's the next trigger that we can really look forward to now?
Yeah, good evening. Yes, definitely the kind of price movement we've seen yesterday and today. Yesterday also the kind of selling we saw in the market in the late hour, that was without any news from the Fed. Still we fell so much. So I think market is definitely lacking momentum. I think the next trigger now would be the domestic election results. I think the state election results which will come in the first week of December. If we're going to get some trend from those, you might see some rally and some buying coming back into the market. But I think till that time, market should remain choppy, and it's to be seen whether we take a support.
Ashwini, I wouldn't get into why markets have fallen, but my question to you is that based on yesterday's and today's price action, has the trend reversed decisively?
Well, if you call 10% moves a trend, then it has reversed. But clearly you have to look at it in perspective. Every month we play this game. Market has come down, it's come down because of A, B, C. It's come down because it reached 61, 6200, which is the top end of the range. At 55, 5600, the market will again latch on to any positive statement on tapering. So chances are that, in the natural course of events, the market was losing momentum, and it just so happened that FOMC had a few references. So I don't think, a permanent downtrend has started. Similarly, at lower levels, once short covering begins, I think this entire thing will get reversed, and maybe next month we'll be again sitting at 6200. So nothing really is changing with all of these, choppy moves of 10%. I think the market is waiting for that game-changing event to break out of this range. Till that time, we are condemned to be in this 5700, 6200, 6300 type of band.
Gautam, let's come across to you. What do you think is really spooking the banking space? Because as a whole, day after day, you continue to see accelerated selling pressure there.
I think banking is the kind of the leader in the beta pack for the markets right now. So the market's correct or profit taking, or even at the futures level that there is selling the markets, then banks clearly lead the way. So it's a reflection of the overall market direction. Apart from that, the only thing I can think of what's spooking the banking space is the yields going up, the 10-year yields going up. So that's caused some concern from a short-term trading point of view among bank investors.
Neeraj, if for a moment, let's assume that markets today have corrected because of tapering fear, because of liquidity concerns. Once the dust settles down, do you think markets could resume the uptrend? What I'm trying to gather from you is that do you think the current decline is a good buying opportunity?
Yeah, I think it is a good opportunity, but I think I'll wait to see a couple of days more and see what kind of FI figures we are getting, because yesterday we got a very small buy figure. And because all said and done, liquidity is playing a very important part in this rally. And whether, even if the stock shifting is happening from to high beta, then also liquidity will play a role. So I will definitely see how the liquidity is going ahead, and I'll wait for a day or two more, because today, maybe because of Fed statement, but I don't understand why the market fell yesterday in the late hour also. And there also was a massive sell-off in the market. Point-wise, if you see about 80-90 points we lost yesterday also. So I would see and get a little more clarity on what the direction of the market is, and maybe closer to 58, 50, 1500 kind of a band. Maybe I'll in spite of whatever headwinds are there at that time maybe I'll become a little courageous and start buying even in spite of headwinds around me.
Ashwini, what's the call on the bank Nifty now?
Clearly, whenever the currency depreciates, Bank Nifty tends to go down, and it's possible that in this sort of a market, it could easily go below the 10,300, 400 zone that it had bounced back from last time. So you should expect levels closer to 10,000, 10,200 if the momentum on the downside continues.
Ashwini, So, since you are of the view that we are not in a trending market, we are still in a range-bound kind of a market, what should one buy? Because whenever markets will bottom out, cyclicals will bounce back. Should one revisit cyclicals?
Yeah, it appears that defensives are not really defending the market. So I don't think trying to get into, TCS or Infosys, etc. will help you out very much. Around 55, 5600, get into those large private sector banks, all of the large caps which attract FII money. And chances are you'll again get your 15-20% ride back up. So it's more a matter of levels of the Nifty than A, B or C stock. So chances are at 55, 56 if you get into cyclicals, that may be good prices to hold stocks even for a post-election scenario. If you have things favorable, maybe by June, July you could have a Nifty of 7,000.
Okay, Gautam, what would be your view on HCL Technologies? Would it be a buy for you purely based on the valuations? And if IT continues to lead, is there a further amount of headroom that HCL Technologies can see in order to catch up with Infy and TCS?
So within the IT space, we actually prefer TCS and Infosys more than HCL Tech. HCL Tech, in fact, we have a neutral right now. And the reason for that is from the next 6-month perspective, the cyclical upside benefits will be much more for Infosys and TCS, given their product mix and geography mix than HCL Tech, because HCL Tech has a big part from infrastructure, which is not really the cyclical beneficiary over the next couple of quarters. So in fact, in terms of growth, you could see TCS and Infosys possibly benefiting more from the cyclical side, and therefore those stocks doing better. Infosys has caught up in terms of rating multiples and versus HCL Tech, and that trend is likely to continue in our view.
Gautam, Jaiprakash Associates is at about levels of 50 and you've got a price target of 71 on that one. What's fueling the optimism on this stock? Because even though they have sold one asset, the debt problems continue to linger.
So JP Associates has always appeared a value stock if you look at the asset valuation, but it's an issue of how to monetize those assets and how those assets will be viable in terms of cash flows, not in terms of underlying value over the longer term, but in the interim whether they have the cash flows to make them viable and even at the extent of surviving in some form. So the value is always there in terms of the assets. So it's a question of what value the market ascribes. So at the lower end, market was not willing to ascribe value to a lot of its assets, with some visibility on asset sales. Again, they're very small, but at least the willingness is there from the management. It shows that the management will be willing to sacrifice some assets if it's required in the extreme case of survival. So that does bring in a lot more confidence around the valuation of the assets, and that's the reason why we have that kind of price target for the stock.
Neeraj, for PSU banks, there are a lot of asset quality concerns. The book quality clearly has not bottomed out. That may not be the story for private banks, but in last 2 days, private banks have led the decline. What is the reason behind that?
I think it's more of profit taking, because the last rally that we saw was mostly led by banks, though public sector banks had also contributed to it. But private sector banks also did move a lot, like stocks like Axis, ICICI Bank. There's a lot of buying happening there. I think with a little bit of fear coming into the market, some profit taking is happening there. I think this is a good opportunity. You've been through a results season. You've seen how the results have been for all these private sector banks. You've seen how they fared. So you can definitely use this opportunity to get back into private sector banks at a decent level, which can be the next 2-3 days. You may be able to get another 5-6% down from here.
Ashwini, are we likely to see more downside pressure on Reliance Industries?
Well, it appears so, because last time Reliance bounced back from about 850. This time, it's reached those levels before the market has reached its intermediate lows. So chances are that, given that the rally also ended much before the previous intermediate highs, I think Reliance should head towards 815, 820 if the market downside continues.
Ashwini, what about the trading favorites? The flavor of the season has been Tata Steel and Tata Motors. Where are they headed?
Well, Tata Steel and Tata Motors seem to be strong, so maybe it's worthwhile trying to look for buying opportunities there on declines. Tata Steel to about 350, 355. Similarly, even on Tata Motors, the rally started from about 345, 350. So another 30, 35 bucks lower. If you get that opportunity, I think both these stocks should be bought on declines.
Gautam, if we look at your holdings, you have a price target of 535 on Reliance Infrastructure. Now, most of the cyclical stocks, they're up by close to 15 to 25% from the recent lows. Why do you still like Reliance Infrastructure? Because it's too really early to really make a case that earnings have revived for the sector or for the company for that matter.
So again, in a way, it becomes similar to JPA. This is a question of asset value and the cash it has, etc. So on that basis, it is looking attractive and cheap at current levels, and our price target is backed by that asset valuation basis. But yes, what you are saying is